Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A bearish dark cloud cover pattern yesterday as the market continues to be squeezed between the same two forces. Overhead, we have the combination of the upper time, currently 105.09, of the steep and more recent mid-February to end of March bearish Andrews pitchfork. This upper time is helped and bettered by the falling short moving average, currently at 105.15. Meanwhile, below we have the support of the lower time, currently 103.51, of the January to May 2021 bearish Andrews pitchfork. Now, this shallower pitchfork has successfully run the bearish incentive here for a year now. Add to all this that the market closed last night within a congestion zone 104.92 to 104.51, which contains within it the February and March 2017 lows, both at 104.92. One other quick point. Immediately above the original congestion area of 104.51 to 104.92, we now have a separate but related resistance area recently formed during the last 3 weeks, between 104.92 to 105.68. Meanwhile, looking below, the lower time is traversing through another congestion zone between 103.38 to 103.69. That contains the December 2016 low at 103.49 and the January 2017 low at 103.38. So far today, well, no real clue as to which of the two, the supports below, the resistances above, will triumph in this test of wills. As a result, the market is slowly edging up and out of the 104.51 to 104.92 congestion band, but not by much. Cable, aka sterling against the US dollar. A bearish harami yesterday and a possible day two in a 2-day pipe top formation as well. The congestion above between 124.78 to 125.09, that contains the 38.2% Fibonacci line of the March 2020 to June 2021 move at 125.09, capped the rise and saw prices drop down to settle just above the newly constructed congestion zone from early last week and late the week before. And that's between 123.22 and 123.37. Overall, last week's moves lower have been a continuation of the move down from the recent late February to mid-April descending triangle pattern. The initial target X in the 126.55 area had already been achieved, and the harder secondary target X1 in the 123.60 area was reached 2 Fridays ago. There is now a possible target X2 below, right on the 120 even area. This is the potential target of the mid-April today action being a possible bearish halfway hesitation. Right now, this had been looking almost unobtainable until yesterday. However, it is still a stretch to get down to those levels. So far today, a slightly lower open, but then a bounce off that new congestion between 123.22 and 123.37, though the drive higher has been limited. Euro sterling. A reactionary bullish engulfing pattern yesterday in response to the previous session's drop down through the long moving average, currently at 84.43, the upper trend line, currently at 84.28, and the November 2021 to date, a lopsided diamond pattern, only finally stopping at the rising short medium moving average, currently 83.97, before pulling back up to close at the flatlining long moving average. This set the scene for yesterday to see the market test down to the upper trend line once again and become rebuffed once again. And this time, push up through the congestion at 84.70, as well as the broken September 2021 today uptrend, currently at 84.74. And that also makes up the upper trend line of the extended diamond pattern from November 2021 to date action, and finally settled on this upper trend line yesterday. This raises the question now of whether indeed the overall move up in early May was a false break higher from both the lopsided and extended diamond patterns. Just in case, on the upside for the smaller lopsided diamond pattern, we have a primary target X in the 86.80 area and a harder secondary target X1 in the 87.65 area. For the extended diamond pattern, we have a primary target X2 in the 87.15 area and a harder secondary target X3 in the 8800 area. There is one final pattern, and it is a big one on which I have spoken about now for countless days, weeks, and months even. It is the very large falling wedge pattern, currently 84.74 to 81.69, which was still in operation, but which had fallen into the shadow a little with the diamond patterns. This pattern had been triggered, and it has the most ambitious target of all on the upside. Target X5 for this pattern is in the 88.65 area, though with this fresh move higher, it may be finessed. I know it is a huge ask, but it seems these days to be the season to give huge asks right now. So far today, a higher open and a small extension of the upside range from yesterday, before coming back down through the upper trend line of the extended diamond pattern and below the congestion. And that's at 84.70. Right now it's looking like a it did look like a proto bearish dark cloud cover pattern in the offing, but maybe moving towards an indecisive spinning top. US dollar against the Indian rupee. And complex and interesting pattern yesterday that also resonates for a possible pattern that has been constructed during the first 3 days actually of this week. Yesterday was a combination of an immediate countering bullish open and close long white Mariposa, a bullish double, and a bullish engulfing pattern, if only just on the last. It was also day 3 in a 3-day bullish stick sandwich pattern, which is not always as bullish as that moniker implies. Overall, prices are still in between the lower time below, currently at 76.82, and the middle time above, currently 78.27, of the mid-January to early April bullish Andrews pitchfork. We still have overhead target X in the 78.30 area. This is the potential target for the whole of the 2022 action, being a possible bullish halfway hesitation. In between, you have the middle time and the upper trend line, currently at 78.18, of the late August to date ascending expanding wedge pattern. Now, so far today, a reactionary move back down, with an ever so slightly higher open and looking right now like a possible combined bearish opening black Mariposa and bearish dark cloud cover pattern. US dollar against the Brazilian real. A bullish thrusting pattern yesterday after the previous session's bearish opening long black Mariposa. Interestingly, the market closed on the big 50% Fibonacci line of the October 2019 to May 2020 move at 496.58. Additionally, the market once again, for a second session, has fought shy of testing down to the combination of flatlining short-medium moving average, currently at 489.30, and the 2021 low at 489.08. Above, we have a small resistance congestion at 505.73 and 507.39, but the next significant resistance is the rapidly descending medium moving average, currently at 509.56. Overall, it seems that there is now limited appetite in any attempts higher. Finally, I have succumbed, as I said I might, to drawing a start of 2022 to date bearish Andrews pitchfork. We'll see how that develops. US dollar against the Mexican peso. A reactionary key reversal up and bullish engulfing pattern yesterday, though the rise was, I suppose interestingly enough, halted by the lower trend line, or uptrend if you will, of the June to October 2021 descending triangle pattern. Further up, we have a slew of resistances, starting with the declining short-medium moving average, currently at 20.2432, all the way up to the important 61.8% Fibonacci line of the July 2017 to April 2020 move at 20.6062. Additionally, we also have up in that region targets X2 in the 20.4960 area and X3 in the 20.6605 area. These are not resistances, but primary and secondary targets for the late March to late April double bottom pattern. Now, target X2, the primary target, was achieved 3 weeks ago, but target X3 is no longer viable, and both will actually be retired after this commentary. Meanwhile, looking below, we have previously mentioned, or I have previously mentioned, from the double bottom, the mentioned congestion from the double bottom formed from late March and through April. We are still inside this congestion. Now, looking at the recent action since mid-April, we have the possibility of a lopsided cat's ears pattern. More on this as it develops. And so far today, a further test up to the lower trend line in the old descending triangle pattern, and another rejection back down, but not by much. Thank you for listening. The short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.